So, but no, I'll just prepare myself for chaos and confusion. Right. Hopefully you can all hear me. Welcome, Educate to Trade, 17th of March, 1:20. Remember, Wall Street's opening an hour earlier for the next 2 weeks until our clocks bring forward. And after a whopping Wednesday, with a Zoom yesterday, Chris and Jerry on it on the Fed, and obviously we saw the Fed lift their rates yesterday, and obviously concluded that they were raising them again. Now, obviously, in the markets here, we've got on the left-hand side here the news that has just come out about the, what it said, the Kremlin report of major progress in the Ukraine talks wrong. And obviously, this news that's coming out is keep it simple. Any good news of peace, we march up 200 ticks. Any bad peace, we march down 200 ticks. Now, what we've got in the market, we've also seen Christine Lagarde has warned about prices because of the war risk growth. And we saw, obviously, the tax has taken a tumble for the worse here. From where we are down, let's put it on a 5-minute chart and to see when that news comes out how much we drifted off from the morning. Now, again, look at the indices. Now, the big news on the FTSE, although they agreed a 0.25% rise, a 0.75, everyone knew that. The interesting thing was the vote, 8-1. Now, 8-1 was shocking because a few people would have thought would have gone for 0.5%. Mr. Cunliffe, who I think is Deputy of Bank of England, he went for them not to raise rates at all. And we saw this, for instance, it's horses and courses. A lot of people thought it was good to, in theory, buy the FTSE. But look at when your news comes out at 12 o'clock, say, get the right contract for the right news. 12 o'clock comes, the 8-1 vote comes out. Look at the pound. The pound goes from 132, and in the space of 10 minutes, almost down 90 ticks. We said that before. The other one we said was a big one was the gilts. Obviously, basically from where they were at by them saying they're only raised by 0.25, the vote 8-1. It was almost deemed as a cut. Look at the gilts. On a 5-minute chart here, the gilts goes from 121.26. 10 minutes later, we're 100 ticks higher. Now, we say that all along. Pick the right trades, pick the right contract. Had you bought FTSE, we said before, you'd have done right. The interesting one here is Sonia short sterling. This is at 12 o'clock. So in theory, the higher the Sonia goes, the more they're going to cut rates. Remember, 100 double O is 0%, 99.00 is 1%. So theory, at basically 5 minutes to 12, we're looking at the UK rates to be 99.09, which is 0.91%. Now, when the news comes out 8-1, we have rallied here massively, almost 0.1%. That's how much the market take it, and that's how much the market moves. You learn that. You do a course of educated trade. We will teach you of the other markets to trade. So bear that in mind because it was fairly huge. Now, what we're going to go here is we quickly can come on here. I'm going to try and get us to come into the indices as such. Bear me in mind as I'm just trying to get the right symbol. Well, we've got it there, right. Okay, now what I was yesterday, I was doing some risk management at another company, and they were all using ladders. And obviously, if we look here, we've got the S&Ps here, mini S&Ps, see what they're trading, this market down here. And this tells you the bids all the way down to where we are. We're trading 37.5, so giving you almost a 5-point price down and a 5-point price up. We're going to keep it up here and look at this as we come into a Wall Street to see how fierce it is. Now you see the S&Ps here, the volumes here, 30, 50, 32, 42, 39. Now let's put it on, if my eyesight's right, and put it on the mini Dow. This is the mini Dow. This is when Jerry and Chris and myself have been screaming at you for years that the Dow is so thin and so liquid as such that you see how quickly it moves. Here we got, remember, 6 lots, 3 lots, 5 lots, 4 lots. This is so thin to where we're trading. Again, with a quick look at the DAX instance here, again, 5, 6, 4, 3, 2, 1, 1. Now, let's go on to one we said the same, Eurostoxx, yeah? Eurostoxx and DAX are roughly the same. But look at the volume, the size of the Eurostoxx. It's 10 times bigger, 115, yeah? 105 here, 47.53. So, in theory, if you do want to move to Eurostoxx, you need to have some serious size or some regional behind it to move it. Again, remember, the Eurostoxx does roughly 2 million contracts a day. The DAX does roughly 100,000. So if you want to be a serious trader and anything else, you can risk more in the Eurostoxx because it's more real. You can't just spoof it. In the theory of the DAX, you can spoof the DAX fairly easily here, because you've probably only got to buy 30 lots, so you're going to move it 2-3 points, and obviously then the dominance will start tumbling down. Again, let's have a look. Otherwise, here, Nasdaq again is fairly thin. Look at it, you've got gaps here somewhere, yeah, 3, 2, 1. So we know at 2:30. Why is it going to be busy? Yeah, because there isn't a lot in there. So we do advocate, and we're going to put it on the S&Ps here. And to see what goes on. Now, remember here, there's lots of different platforms you can use. We're not advocating you use CQG or Tickmill or any other IG, but that's best for you. What we're trying to say to you at the moment is that a ladder trading at the moment is proving quite popular in that if you want to trade and see what size of these, especially on this ladder trade here, you're in a FIFO, first in, first out trade. So if you put your order in there and you're the first one on the bid there, it's only got to trade one lot and you get filled. You don't tend to get that on other platforms. Right, I'm going to leave that up there and actually have a look. With the news up here, we'll leave the news up here as well. We've got it in there as well. Going out the news, obviously, Bank of England raises the rates to pandemic levels, 0.75. The Kremlin talks progress. Robbie mentioned that. The Euro war in Ukraine sent shockwaves out there, and the central banks currently are not worried of the threat of war. And obviously, Christine Lagarde warns of the risks that come out. Now, obviously, other news that's come out was the 10-year yield. We've gone through that before, and obviously they hit new highs of 2.246% yesterday on Mr. Powell, who did a remarkable job keeping the markets up, and the 2-year rose to 2%. That's the highest since March 2019. In theory, if the yields go up, we do expect interest rates to keep going up. And in theory, the indices should wobble a bit. They didn't wobble yesterday. They rallied very well, and I think Mr. Powell needs a pat on the back of that. Oil rises again on the IEA shortfall warning, and we've got some figures out later on today. Now, obviously, we're going to come in here Thursday. I know Jerry and Chris are in there. Thursday's normally our busiest day of the week. Why we tend to get the most volume. Currently, however, because we had such a busy day yesterday, we started early yesterday with obviously China bringing in some QE to support Hong Kong. Hong Kong ran at 2,000 ticks from 5 o'clock yesterday morning, and again this morning was up another 1,000 ticks. So we've got a whiff of QE in the air over in Asia, which put a slight bit into the markets. We've kept FTSE up today. DAX has obviously taken a turn for the worse from where we are and down 100 ticks. So it'll be interesting to see where we are in the markets as we come into the opening. I'm going to quickly see if I can minimize that and let's try this way around. Put the figures up there for you to see. And at the same time, I might have to do it this way. Maybe my IT skills are terrible. Chris took me 2 days to set this up, so I thank him for that. Right, here we go. We've got the oh, I've lost it again now. I'll tell you, my IT skills were so bad. Right, don't press the button. Put it there. Right, we've got it in now. And we've got it here. So in theory, we do have Wall Street down a mere 140. I remember it was up 500 yesterday, 0.44. Nasdaq roughly the same. DAX has taken a turn for the worst. Obviously, on the Lagarde comments have not helped. FTSE a plus, but we know why it's plus. That vote 8-1 was almost them cutting the interest rates, even though they, in theory, went up 0.25, but everyone knew that anyway. Hong Kong has come back a bit. All these markets in there. So we're going to have a quick look to see where we are at 1:30. We've had the Philly Fed out, industrial production all out, fairly okay. But yeah, after a big rally we had on Dow, a lot of people were slightly confused because a lot of the things that were said or were mentioned by Mr. Powell were, as we said before, the words we said yesterday. He is carefully watching global developments and such. And although he said that rates may go up the next 6 times, one of the things that some people have put out there is that he may have to raise rates more than 0.25% at the next meeting. Industrial production, looking at that, rose by 0.5%, increase 1.2%. I was just reading that, so that's slightly better. So it'd be interesting to see what we see does come out. But remember, DAX has almost given back half of its gains from it yesterday. A very volatile market, and again, we would wait for the news that comes out. If you're interested in having that trial platform on Tickmill, you can have it on a demo free for 28 days. Ping us on the discussion group or chat to one of the people, and we will give you the link to join up. All you have to do is give an email out. The other thing we've got going hopefully soon will be in conjunction with Tickmill and Chicago Mercantile Exchange and Educated Trade. Obviously, it's a trading challenge, and obviously there are rewards in there. Again, that may help you link towards trading what you want on the ladders. Right, we've got S&Ps here. I haven't put up on purpose a market profile yet to see where we're in, because on the opening, I think we will see some initial volume. We want to see this on the ladders, actually, the initial volume that comes in on the figures here. Let's have a quickly look at, we can get Wall Street up here. We're just trying to find the right one. We've got many of them. I can't see it. Sorry, YMM. It's weird. Someone asked me the other day why they got all these weird things. So Wall Street is YMM22, M being for June. And I don't know what the hot is. So we're learning from it as well. We're all practicing this for the next 28 days. But we've got Wall Street up there, and we can see how thin it moves. And in theory, how in theory it doesn't actually trade sometimes as these algos come in and pick the market up 5 or 10 ticks. We've said this all along, and looking at it from the left here, can we see it trading? The line in between tells you where it officially is trading, but if you're looking very carefully, the size that is at trading isn't actually really there. It's moving very fast, 5 or 10 ticks. So again, if you think you can trade Now really with a 10 tick stop to see what's going on. And remember, you're first in it. If you're trading a retail platform, you've probably not even got a 10 tick stop. You've probably got a 7 tick stop because it's going to wick you out either way. And we see here in 5-10 seconds here, we're moving 5-10 ticks other way. And this is a relatively quite open for Wall Street and everything else. And normally we take 2-3 minutes to see where we're going to go on the markets. And you see we just drifted off there, 20 ticks in a very short time. Let's get this back up here and see where we are. Again, 30 ticks. Let's put it back to the S&Ps, and you might see the volume here. Yeah, fairly substantial. You could be looking here around about 2600, 160 lots there. People bear that in mind there. Is it real? Is it fake? And people might be using that as a stop. Again, did he iceberg that? He probably did iceberg that. Yeah, iceberg is that he can hide the size he wants to trade. He only show certain clips. So if he got down there, he's trading about 70 lots. It stopped, and then obviously people realised that he wanted more to buy, and immediately we saw the rebound up 3 or 4 points. And that is why the ladder is sometimes fairly crucial when you trade, because if you do get some big volume down there, especially when we come to a Fibonacci or points of control or value highs, value highs, you expect there to be a battle there, and you expect there, if you believe in your charts and everything else, to be some volumes on the bids, if it's at support level, and indeed the opposite on a resistance level as such. Again, if you look emphatically to see where the rest of the market is, let's put it on here. And that, I think, at the moment has been probably the quietest open on Wall Street we've had this week. And that obviously follows the big position we had from the Fed last night, which obviously 300 up, almost down to 100 down, and finishing 500 up. Again, the question you can ask yourself, the Thursday tends to love a move from 3 o'clock, and indeed from 3 o'clock, let's wind it back and out at 2 o'clock. So at 2 o'clock, I think we see a general move, and obviously that loss on Wall Street, 125 ticks, could be easily eroded by then. FTSE's holding its own. Again, remember that we saw how much the gilts have moved. We saw how much the pound has moved on that cut, and that is obviously very much beneficial to the FTSE, and that's why it's probably one of the only major indices here that is up today, up 0.5%. Again, see the slight support in there. Again, if we're looking at those S&Ps, that 4326 level did hold massively, yeah. And obviously someone in there wanted to buy some there. But if you've got big size, you trade the markets, you don't sometimes want to give your size away, because everyone will see it on the land and think, you know what, I'll buy just above that level and use his order as a stop. No, you get stopped out. But obviously since then, and it didn't really break that level, 4326, you bear that in mind, we have rallied a whole 10 points higher. Again, a simple use of using the ladder. That's what we've done today, looking in there and everything else. So again, Wall Street's rallied nicely, 40-50 ticks. Tax has done slightly better, and FTSE's are obviously again pushing on as rallied 15 ticks into the markets, and S&Ps again the same as Wall Street, probably 0.3% down. Hopefully that's of help. Yeah, we'll be trying to do, hopefully again, more of the same, looking at these ladders when we trade, but it is very, very helpful to trade. So if you, again, if you want to know what it is there, ping us. Yeah. Also, if you want to be on the email list, we send it every morning. I know it's proven popular to give people an inkling to where the market goes on. Ping anyone else at Educate to Trade, yeah, and we will send you the link or add you to our email list. Okay, I think we're done there. Chris, you there? You want to say anything, or we done? He's not on. He's having a little rest. He's watching the horses. I don't know if you're back on the horses. My Cheltenham, I think I'm slightly down in the week, but the main race is at 3:30. Again, last week we go. We're seeing how thin the market is, and almost, I'd say, no real Wilson trade here, apart from the Nasdaq. Obviously, it's the obvious one. Can we get the Nasdaq up here again? There we go, the Nasdaq in there. And again, we've seen how fast this market moves. Look at it. This is fierce on the Nasdaq, 4, 5 points at a time. And the one thing I wanted to prove today to show to you is sometimes how fierce and fast these markets move. Look at it, 5, 10 ticks in the Nasdaq without trading. So if you're new to trading, I would avoid the Nasdaq and Wall Street at the moment, because as you've seen here, it's moving so fast on hardly any volume whatsoever. Hence, we advocate the S&Ps and obviously Euro stocks. Again, last quick look at Euro stocks. We did in the morning, the size in there. Again, when you're in a big size up down here, 113, you would bear that in mind if that person is real and you want to support it, because the rest of the market will be aware of it. Again, we'll have a quick last look at the S&Ps before we finish and come back there. And we're seeing how quickly the market can move. This is what the professional traders look at. Yeah. And it's worth doing it because you can get it on trail free. So you have your IG or CMC up or whatever system you use up, and you can have this CQG tick mail next to it. It's a demo model to trade it. We'll be sending some more zoomed out later this week, how we think it's best to be used to when you trade it. We're going to quickly go down here. If you want to put a sell order, if I remember to do it, we come here and try and get it right. Place order in here, and it tells me I'm working to sell one here. Resets tables here, and we come here, place it in here, and it tells me when I'm going to buy an order in it. So I've got a buy order here and a sell order a bit further up. We're in the queue. Green to buy, obviously, red to sell. The same thing. I think we're going to cancel it. I think we press this button. We want to modify it. We can move this up here. Join the bid. Again, we're going a bit high. Bring it up here. Modify the bid. So you can use everything on the ladder that you really want to use. But off here. So again, we modify it. Bring it up here. Modify the bid. And there it's giving us a fill. Yeah. If you want to put a stop in here, let's work it here quickly. I'll get there in the end. But it's all very new to us at the moment. So there. Okay. Hopefully that's of help. I don't think I'll put the stop in there actually. If you want to get out, I think you just set it a market, long one. I don't know how to put the stop inside. You never run an error. You put your stop in. So you take a loss there. You can see what you traded here. Take a 3-tick loss. Remember, they're minis anyway. Right, okay. We'll be back tomorrow at 7:50. And we have a very special guest tomorrow doing our Zoom. One of our students has almost completed his level 5 for trading. So it's great. Hope we can do it. And I'm looking forward to it. And I hope you can join in with him. Nathan Wilkinson, one of Tom Mead's boys, has come in and he's going to present the Zoom at 7:50 tomorrow. Right then, we'll speak to you later. Thanks for that.